Okay, good evening. This is Tom Alexander. This is a special stock market update. It is Thursday, October 9th. It's about 7 p.m. Eastern time in the US. Haven't done one in a while. This is a good time to do one. We're at yet again an interesting juncture in the US stock indices. We've got an index that is panically bid day after day after day after day, shades of the late 1990s. For those of you that were alive then, much less trading then. It was an interesting time, and I've said to many people, and in the live trade room, our live trade room, that my thought is that we're somewhere. The analog, the current analog, is somewhere between 1998 and 2000. I don't know if we're in 1998. I don't know if we're in 2000, but this move since this April low is pretty historic. From a lot of different measures. I'm not going to go through all those measures. You guys are probably aware of those if you're on Twitter/X or, watching television. I want to go through some charts tonight and show you some things. This is what I do every night. I'm just going to do my homework with you and show you some things, and they're just sort of an extemporaneous stream of consciousness analysis and thought about where we are, where we might be going. So let's take a look at the charts here. Okay, we landed on the NDX, so we will start with the NDX. And I mean, it's really something. I mean, we had like the corrections now in the NDX are comprised of hours and minutes and not days. Now, eventually, there will be something resembling a correction that lasts more than a few hours. The closest thing we've come to that was back here, third week in September. We had a 3-day drop that was panically bought, and we've been panically bid since. And it's almost in all time frames, even intraday. So anyway, so where are we? What is the upside target? Well, I don't do magic numbers. Those of you that have followed my work for years, I'm not into Fibonacci extensions, magic upside levels, et cetera, et cetera. The market is in basically a new all-time high ground day after day after day. So there is no quote unquote resistance above us. Resistance in my world, in an auction market world, can only occur where there has been trade before, where there is an important pivot high, where there is a volume node on the horizontal scale, and there's no such thing in the NDX other than Wednesday session high. We double top today against that. Okay, what about to the downside? Well, in a strong uptrend in the stock indices, and I've said this for years, I've pointed it out for years and years and years. A really, really good guideline is the previous session's low or the session before that. And if you go back and you look at, take any out of sample, you can go back 10 years and look at strong trends, especially uptrends, and you'll see that that's a really good guideline. And when you break that, the initial, you close below that day low or the second day low, typically that's a pretty solid signal, especially if you've been up and up and up and up without any sort of retracement, that a top could be in place. Now, that hasn't happened. So it's just up day after day. This is today's session low. This is yesterday's session low. This is Monday's session low. It's just stair stepping higher. Okay, let's look at the SPX. It's here somewhere. Let's see. Okay, here. Okay, let's just take this one. Similar situation. Now I'm going to show a profile view of the SPX because the SPX is really, it's in balance. If you look at this, let's go over here. Here is the profile view of the SPX. So each one of these units, profile units, is 1 day of cash session trade in the SPX. So basically what we have here is one auction. These are, you have day auctions. The auction process is a fractal thing. The auction process is in effect in all degrees of time all the time, whether you're looking on a 1 minute chart, a 5 minute chart, et cetera, et cetera. Well, this is a daily chart where each profile unit is confined to day session hours. So let's look at where we are. This is today's auction. So you can see the overlap and chop and churn in here. You have close here, close here, close here, close here, close here, close here, close here. So they're all over the place. So let's combine this into the actual auction that it is. And it's this basically this giant glob of overlapping trade. So I'm going to leave today out of it, but you can see today is near the midpoint here. I'm going to just for fun, this is today. Now I'm going to fold today into this auction. This has been going on 6 or 7 days, and here we are. Now what's interesting about this is that there's no really pronounced high volume node. This whole thing is just a chop fest of volume. The takeaway here is that there's going to be a sharp move above this area or below this area at some point. And this is an awful lot of volume. If we do go higher, this is going to be an awful lot of volume to get through back to the downside. If we go lower, it's going to be an awful lot of volume to get through to the upside. Back to the cash charts. So that's where we are. Here is today's close again, right here. Today's range encompassed most of the range of the entire structure. Now, something else I want to point out that I pointed out for members in the member report last night. Look at the closes here. 1, 2, 3, 4 closes, all within a really, really tight area near the low extreme of this giant balance area. We came right down and tested that area at today's cash session low. I pointed this out in real time in the live trade room, and that proved to be quote unquote support. And, again, why was it support? Well, it was an auction market level. It was a level that was determined by the actions of buyers and sellers. No magic to it. Okay, let's look at the Dow. Now, the Dow is showing relative weakness. The Dow is actually breaking out of a balance area to the downside. Now, what this does, and this, I'm going through this for the first time with you. After the market closed, I went to the gym. I just got back. So today's cash session high in the Dow now is really important. If today's cash session high in the Dow is taken out, it could be a false breakout trade, which would imply acceleration higher. So the Dow should continue lower under the precepts of what typically happens when you have a balance area and you break that particular market, in this case the Dow, attempts to break out of it in an initiative manner. This is an attempt at an initiative break. This is clearly balance. Okay, let's look at the Russell. Here is the Russell. The Russell is in balance also, 3-day balance. And you have, what is this, Monday's low, and then this is last Thursday or Friday's high. And if we look at the New York Composite, New York Composite is in a similar position to the Dow. Now, this is interesting because the New York Composite is the broadest of the indices. It's all the stocks listed on the New York Stock Exchange. And this is the widest range down day we've seen in a while. Let's look at the equal weight. Here's the equal weight S&P. Similar situation here. So you have this continued disparate trade among between the indices. You have it. You don't have to. I know you're sitting there going, "Well, you're dumbass. It's obvious why." Yeah, it is obvious why. But over time, and I've seen this movie many, 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 many times before. When you have 10 or 12 stocks driving everything, it's not a healthy overall market. Now, does that mean that the index won't go up another 1,000 points before it corrects 2%? No, it doesn't mean it won't. But the concentration in those stocks is getting to the historic level. And in the past, it's never been healthy. Maybe it's different this time. I doubt it. Okay, let's look at the internals real quickly here. VIX has been stubbornly elevated when you consider how stubbornly bid the indices have been. Now, it's up a little bit today. It really spiked on Tuesday, and then it came in yesterday. Today, it's a little bit more elevated above yesterday, but if you look at the moving average here, it's the highest it's been since last August when the market had its last generational buying opportunity here. So, and then breadth, which is pretty worthless. I've been talking about it as a 10-day moving average of NYSE advancing issues that has not been helpful for months. And that's not atypical in a strong bull trend, which we are in. This will once again become useful at some point. Right now, it's really not particularly useful. So, guys, that's where we are as we head into Friday. As I'm speaking, the NDX continues to rally. I mean, we could wake up in the morning and the NQ is at new all-time highs. We shall see. Do me a favor, if you found value in this, please like, please subscribe, make comments, ask questions. I'm happy to answer them. You guys have a great evening. I'll speak with you again soon.